You ever see a stock just explode, seemingly out of nowhere, and you're left wondering, what on earth just happened? Well, today, we're going to get into that. We're going to dissect the anatomy of one of these incredible moves, an explosive triple-digit surge, all through one really fascinating case study.
Take a look at this number, 140.98%. What do you think that is? I'll give you a hint. It's not an annual return. It's not even a 5-year gain.
That right there was the gain for a company called Minerva Neurosciences, ticker symbol NERV, in a single trading day. I mean, what a staggering move. So the big question is, how did this happen? And maybe more importantly, what were the signals? Let's get into it.
So first up, let's just take a moment to appreciate the sheer scale of this thing. This wasn't some slow and steady climb. No, this was more like a volcanic eruption in the middle of the market.
Now have a look at the chart. From October 10th to the 20th, things are pretty quiet, right? The stock's just kind of hovering in that $2 range. The volume is, well, it's pretty low. It's the definition of the calm before the storm. And then, bam! Look at that last line. October 21st. The price gaps up, opening at $8.74, hits a high of over $12, and the volume, it just explodes to over 166 million shares. That is the moment the frenzy officially began.
So, was this just some random, chaotic event? Well, not if you ask a technical analyst. You see, they're always looking for a specific set of clues that can predict, or in this case, confirm a move this powerful. Let's start decoding those signals.
Okay, so we're going to start with an indicator called the ADX. The easiest way to think about this is like a trend strengthometer. It doesn't tell you if the stock is going up or down, it just tells you how strong the move is. And for analysts, anything over 25 is considered a strong trend.
So what was NERV's ADX? It clocked in at a massive 44.13. This is so important. This wasn't just a strong trend, this was an elite, extremely powerful one. It was a huge blinking sign that a major force was driving the stock skyward.
And you know what? The ADX wasn't acting alone. It was like an entire chorus was singing the same bullish song. The price just blew past all its recent averages, a huge sign of strength. The MACD, another momentum gauge, was positive and getting bigger, like an engine revving up. The Arun Up indicator hit a perfect 100, which basically screams that a new uptrend is in full swing. It was just this complete picture of overwhelming buying power, all backed up by that incredible volume we just saw.
Okay, but here's the twist. In the market, a fire that burns this hot can also burn out really, really fast. So while one whole set of indicators was screaming, "Go, go, go," another set was starting to flash some pretty serious warning signs.
And this illustrates that conflict perfectly. On one side, you've got this undeniable, raw, bullish momentum we just covered. But on the other side, you've got a whole group of indicators screaming that the stock is overbought. That just means it's moved too far, too fast, and might be due for a reality check. It's a classic technical tug-of-war.
Let's look at those specific warnings, because they're pretty wild. The RSI, the Relative Strength Index, hit 90.81. Now, to put that in perspective, anything over 70 is considered the red zone, so this is deep in extreme territory. Then you have the Stochn RSI. It was literally maxed out at a perfect 100, and the CCI, a sky-high 640. Each one of these is like a gauge on your car's dashboard just flashing red, over and over.
The analysis we're pulling this from really nails it. It says, indicators scream, overbought euphoria. And that word, euphoria, that's the key. It suggests that pure emotion, not just logic, is now in the driver's seat. And that can be a very dangerous game.
So you've got these incredibly powerful but totally conflicting signals. What in the world happens next? Well, the analysis lays out 3 potential paths forward, and each one has a different probability based on all this data.
So interestingly, the analysts still gave the highest probability, a 60% chance, to a bullish continuation. Why? Because that momentum was just that strong. But they also gave a pretty significant 30% chance to a neutral period, where the stock basically just trades sideways to digest that huge gain. And finally, a 10% chance of a sharp reversal to the downside.
And here are the triggers for each of those scenarios. It looks like the key level to watch is right around $5.70. If the stock can open and stay above that price, the bullish case is still on. If it just bounces around in a range, well, that's the neutral scenario playing out. But a gap down below that 570 level, that could be the signal that the bears are taking over and a pullback is coming.
All right, let's put it all together. You've got the historic breakout, the screaming bullish signals, the flashing overbought warnings. What's the final verdict from the analysis?
The conclusion is actually pretty clear. This was a textbook momentum breakout, a classic by-the-book example. However, that extreme overbought froth, and I love that phrase, it means that anyone involved needs to be incredibly careful. The risk of a trap where the price just suddenly reverses is very, very real.
And this brings us to one last crucial number, the risk-to-reward ratio. It's calculated at 1.39. Now, all you need to know is that any number over 1 suggests that the potential reward outweighs the potential risk. So even with all those warnings, the analysis suggests the odds still tilt just slightly in favor of more upside, but only for those willing to take on that high risk.
So what's the takeaway here? The anatomy of a massive stock surge is complex. It's really a battle between incredible, undeniable momentum and the basic laws of financial gravity. And that leaves us with the essential question, doesn't it? Was this a high-octane play for the brave, a chance to ride historic strength? Or was it just a euphoria-fueled trap, waiting to spring on anyone who got too greedy? The data gives us the clues, but only time tells the full story.